my name is John Riedel, and my partner is Stephen Abenhouse, and we are going over audit confirmations. So what are audit confirmations? They're used to verify different assertions such as completeness, accuracy, existence, and also other auditing assertions. So a confirmation is basically a letter, electronic communication with a third party outside of the entity to confirm or make sure that two amounts match up between the entity and the third party. So the entity can either agree or disagree with the amount, and that will be touched on in the next slide. So if they disagree with the amount, the auditor is going to have to inquire with the third party as to why this happened, or inquire with the entity as to why there's a discrepancy. So a little bit of an overview. Auditors use confirmations to check different accounts receivables balances, accounts payable balances, and also some other large line item accounts on the financial statements. There are positive confirmations along with negative confirmations. Positive confirmations are where the third party is required to make a response, whether they agree with the amount or disagree with the amount. These are typically used in larger transactions versus negative confirmations, which are used in smaller transactions. A negative confirmation is a response that is only required if the third party does not agree with the amount. So if they agree with the amount, they don't need to send back the confirmation. And say if they don't agree, they would have to send back the confirmation with whatever number that they had on their books. So selecting when to confirm. Entities can either confirm at interim or year end. Interim is about 3 months before year end, so there's a little bit of a timing difference when selecting to confirm at interim or year end. There are a few different advantages along with a few different disadvantages to choosing interim versus year end. Auditors will be able to identify problems before the year-end testing if they're chosen to, if they choose to test at interim. This gives the entity or management more time to correct any misstatements or discrepancies that are found using the confirmations before year-end, before the financial statements are filed. There's a couple disadvantages of choosing interim to test. There's a possibility of missing certain large transactions that would have happened in the time between interim and year end, because there's about a 3-month gap there where the entity could have a certain large transaction that would affect the financial statements materially. So eventually these missing transactions could lead to a larger misstatement that might have to be investigated, and they would have been caught if the confirmations were sent at year end. The auditor might have to implement more testing methods, such as substantive procedures, to make up for the timing difference. And now, here's my partner, Stephen Abenhouse, going over 3 more questions. One regarding the unusual circumstances in which we would not confirm accounts receivable, the use of a blank positive confirmation, and also accounts payables confirmations.
All right, thanks, John. So there are 3 circumstances where we would actually be omitting the accounts receivable confirmation. The first circumstance is if the balance is just not material. If like the numerical value isn't significant, we do not need to spin our wheels, trying to confirm the accounts receivable. Our second circumstance is when the communication is deemed ineffective or not properly working. An example of this could be if the third party is maybe unreliable, we can't communicate with them. This is circumstances which we would be unable to confirm our accounts receivable. Our third reason when we would omit accounts receivable confirmation is if the risk of material misstatement is just low. Again, we wouldn't need to spin our wheels, trying to confirm the accounts receivable in their circumstance. So as we relate this to our earthware, which of course we've done a lot of case studies with, we would not need to test accounts receivable confirmation if the amount is low, if there's ineffective communication, or if the risk of material misstatement as assessed in our audit plan is just not, is So now I'm going to talk about blank positive confirmations. As John spoke of, a positive confirmation requires our clients to actually, respond with how much, they think, if they, accept or, disagree with the number that we're providing. A blank one is one that actually requires our clients to write down the numbers. So they're going to have to go into their books and figure out how much, accounts receivable they feel is on their financials. One issue with this is it actually requires them to go through the books, which can cause long delays and maybe, we have a slower response rate. However, the positive side of doing this is, like I said, they actually have to go into their accounts, so they can't just sign it without really thinking about it. They are forced to go in and confirm that number, which definitely could help us when we do our confirmations. So the accounts receivable and accounts payable confirmation isn't exactly the same. There are some differences. One reason there's some inconsistencies when we do the accounts payable and accounts receivable is that management would tend to overstate assets and understate liabilities if fraud occurred. Therefore, confirmation is more of a test of existence, not completeness. If a confirmation is used to test completeness, it focuses on amounts with such low balances as opposed to confirming a key amount done for accounts receivable. Another reason that accounts payable is going to be inconsistent with the accounts receivable confirmation is that we have a lot of evidence for accounts payable that's produced outside of the company through our vendors. So they'll let us know if we're not paying them, and they're going to be coming to us to try to confirm them. So when we look at kind of summarizing this presentation on confirmations, a confirmation is just a letter or electronic communication sent externally to an entity to make sure that the amount of confirmation is equivalent to what we think it is, and we're confirming and we're inquiring to see what that is. Auditors can always confirm at the interim or at the year-end dates, and there are some positives and negatives that go along with that, as John explained. Materiality, ineffective communication, and low risk of material misstatement are reasons to omit accounts receivable confirmations. Those are typically unusual, but those are the three if they do occur. And finally, the purpose of a blank confirmation is to have the recipient fill out the balance without just accepting it or denying it. They actually look at it, go through their books. So thank you for watching this presentation.